What's up, good people? So welcome to EagleEyeFX, and guys, I'm back again with lesson number 2. So in lesson number 1, we went through some of the examples of how to look for selling opportunities on these high value areas. And guys, we want to look at more examples, maybe 2 more examples. Then now we can go and start looking for opportunities for a bullish market. All right, so we've been on a bearish market now. I want to show you 2 more examples, then we can now start looking at a bullish at a bullish market. So guys, remember to show some love by liking this video, subscribing to this channel, and turning on the notification bell so that you don't miss out anytime we post other video anytime we post these videos. And guys, I want to believe that you're getting some value from these lessons, and I pray and hope that this one, they're going to make you to become profitable. So we actually took advantage of this level, and I showed you how to approach the market this level over there. So now we want to look at this level over here, so you can see that the market came all the way to this level. So this actually a triple bottom on the daily time frame. So we want to see how we can capture a move here to the downside. So let's go to the 4-hour time frame. So you can see that once this market got up over here, then we drew our structure over here, because remember, once we get here, we want to see, this kind of a structure. Then from that, now we start looking for our selling opportunities. So let's go to the 1-hour time frame. So on the 1-hour time frame, so you can see that we had that spike over there. So we can actually even look at this level and how how this market was behaving at this level over here, and how you can actually maximize and catch this move to the downside. So let's mark this to be like maybe our first target, where we're going to be looking for an opportunity. And then now we have this, so we can mark this we can mark this as our first touch. We can call this our second touch. So we want to get our third touch, then we can do what? Then we can look for selling opportunities to the downside. So if you play out this, you can see that immediately we are on our third touch. So guys, like I said, it's not like automatic, but sometimes you want to be remember, we want to say the norm. We've seen that the market tends to come and give us some sort of like a double top over here before we see a move to the downside. This is just my personal observation. So yeah, and I've seen it work. So you can see that, look at that, immediately the market came back inside. Okay, so you don't want to be in a rush to enter, because you can easily be taken out. So if let's say we do that, place our stop loss maybe around up there above 10 pips, and let's say this is our level target, it's around 11%. Let's see if this one could have played out, or still the market will come back and give us a second touch before it actually plays out. So you can see that the market went down nicely. Then what happened? Look, the market did what? Look, the market came back. So you can see that this spike over here, it could have done what? It could have actually taken you out. Okay, it could have actually taken you out, but like we said, we want to wait for this market to come back and give us this kind of like a scoop or a double whatever top. Then you can now be able to come in. So let's wait and see how this played out. So yeah, so you could have actually entered there. So once we are back inside the structure, we want to enter somewhere around there, and then we don't want to place our stop loss somewhere around here. I mean, that is too close. So maybe you want to give the market maybe space to breathe around 17 pips over there, and then this is our target around 6%. Okay, around 6%. So let's see, yeah, around 6.5%. So did it play out? Look at that, it just went straight into what? Into our target. Look, immediately just goes and hits our target. So you can see that here initially the market will actually could have taken you out. Okay, the market could have just taken you out and then immediately just go towards your what? Towards your direction. So you can see that this thing actually practically works, and you can see that that could have given you a clean 6%. If I go to the higher time frame, of course the overall move is we want to hold this thing all the way to the end. If you can, well and good. If you cannot, then you can just take that, or you can just keep scaling in. Let's see how this played out. So you can see the market actually went to the downside. Yeah, we come back. Let's wait and see. Let's wait and see if to see if the market came back. Did it come back to the top? Let's wait and see. Yeah, so you can see maybe that's around about 17%. Now let's say maybe it could have taken you out somewhere around here, because remember we have to trail our stop loss. So maybe it could have taken you around 13%. All right, and look at this. You see, this is now current. You can see, so you can see this is a level. All right, so this top over here, the market has come to this level. Look at the structure that has formed over here. So you see that it actually is exactly the same thing that we are talking about. Yeah, you can see how the market begins to approach. If you maybe take out somewhere around there, the market now begin to approach that level over there, that high over there. Of course, we'll have been interested in, though normally I would want to get a high on the daily time frame. So maybe for this one, let's see, that's a rejection. Then maybe got another rejection. Then yeah, so let's see if maybe you could have just entered here. Maybe this one you could have just scalped. Then maybe your stop loss is around there, around 14%, and just target here. It's a 1:3. You can see that so far you could have actually hit your target, and already this market, you can see that the market is still playing out. So that's around 4.5. So even if maybe this could have been your target, it could have been a quick 3.2%. But let's see up here if maybe on the 15 minutes time frame, if the market came back. So you can see that the same thing happens on there. The same thing happens on the what? Even on the lower time frame. Yeah. So assuming this was out there, so like I said, you see the market will come with a very strong momentum. Try and show you as if, yeah. Okay, let's reduce the speed a bit because I want to explain this thing to you so that I can understand it. So you can see here how the market just it approaches the place in a very strong momentum. So you see, if you enter here, that's what we are talking about. That's an early entry. The market, and I've said with experience, I've come to notice that the market tends to come back again to this level before it actually commits to the downside. So you can see that goes down, then look, it comes back, even though it never touched exactly, but you can see that it actually came back to that level, right? So you can see that maybe you even could have entered somewhere around there, made your stop loss maybe around 10 point something. Of course, this could be your target. So you can see even your risk to reward now it actually increases, and then you can see that from that the market does not even come back. It just goes straight towards your take profit. All right, let's look at one more pair. So we're going to look at CAD CHF. All right, so this is CAD CHF. Already you can see it's given us a structure over here. So we have this sort of like a descending channel, and then also we have this a bullish momentum over here. Of course, immediately from this we are expecting a what? So this an impulse move correction. So we want to look for an impulse move all the way to this level over here. So our interest is at this level over here. So you can see this was our if you go to this level and this level, you see that the thing is actually the same, but you can see this is where we are now. So what we can do is that we can use this high for now. You know, that's our most recent high over there. Okay, and what do we want to do? We want this market to come back. So our target is going to be down here. So we want this market to come back, give us this kind of a structure. Then we are going with it to the downside. So let's go to the 4-hour time frame and see how it's actually playing out. So you can see that on the 4-hour time frame, you can see it. So we can actually mark these lows. All right, this can be like our playground. Let's go to the 1-hour time frame, because remember that is where we are actually taking our entries from. Okay, 1 hour and 15 minutes, but maybe you can try first of all to do the 1 hour. So already you can see we have an ascending structure over there. All right, we have 2 touches. So of course we want to see if this market can come and give us our 3rd touch before we do what? Before you go to the downside. So what you can do is that you can just clone this and put it here, and now that marks as our what? As our playground. So let's see how it goes. So you can see it goes back there. All right, then what happens? It comes back. Okay, all right, so let's see. So what happened over here? So we can actually evolve with the structure. Okay, so we can see that now we have that point over there, and we have that point over there, and we have that point over there. So what do we want? We want to see, so we have that touch over here and that touch over there. So we have to learn to evolve with the structure. So now we want to see our 3rd touch, and it has to come all the way to this our significant high over here. See some mass psychology, then we know that now it's time for us to do what? It's time for us to move down. So you can see it came all the way. All right, came all the way to that level. Okay, and touch that. So we have now one. We can see this is 3rd touch, but you can see it has not fully come all the way to that level. So you want to wait and see what happens. So now you see here, this is what I was talking about. Now if you enter here, let's assume even you entered here, how big is that stop loss? Maybe around 20 pips here, and targeted that level, or maybe even that level over there. That's around 3.98, almost 4%. Now let's look at what happens. So you can see the market goes down. Look, you see it comes out and then it takes you out. So it means that, you see, we have to wait for this, and this is what I was talking about. If you go to the 15 minutes time frame, you can see this thing, it just keep repeating itself. What does the market do? You see some very strong, bullish momentum or bearish, depending on the type of market. Then it almost gives you the information that this has been broken and the market is going to the upside. Then immediately it just comes back inside your structure. So you can see already mass psychology has played out over there. So of course, once that strong rejection was seen, that is the time maybe you could have entered after the close of this bearish candlestick over there. Then maybe our stop loss will be above that wick around 15 pips, which is very okay. All right, then this will be our first target, which is 6.09%. So of course we can also call this as our first touch. This is our 2nd touch, and then this is our that is our 3rd touch over there. All right, beautiful. So let's look at what happened after that. You can see immediately after that the market just goes down, and then, all right, great. What happened? Let's see if it took us out. So this one came back close, came to our entry close to our stop loss, but I see it didn't hit. But I'll see if maybe you could have taken around 3%, around 2.92, or maybe this one could have taken you on break even. Then once it comes back over here, then you could have done maybe another entry, and we are going to talk about re-entries because it came back to an entry. Let's say this one maybe could have taken you out here, maybe or maybe somewhere around here, maybe around 2%, came to an entry, and then let's assume you just entered again. Okay, you entered again, and what happened after that? It's gonna be going for that 6%. Look at that, it just goes and goes all the way straight to our what? Straight to our target. So you can see that this one, let's play out that. It actually never, oh, it came back. Okay, it came back. Let's see. Okay, let's speed this a bit and see how long. Okay, all right, played out. Okay, it was forming a bigger structure. We are going to talk about that. This one could have really played out with your psychology. Good, let's hit that. So this one could have really, messed up with somebody's psychology to the point whereby you feel like you just want to just maybe close it off, because see, these are these are a lot of consolidation. But you can see that finally it actually hit our target. And if you go to the higher time frame, of course, if you were to hold this, remember the overall move is to hold it all the way down there, which is around 22%. If you can be able to hold that, and look at that, it just came straight and came almost there around 21.73. So you can see that it actually played out. This was just one big consolidation. We are going to talk about that. Impulse move correction, impulse move correction. So you can see that multiple entries are available, but we're going to talk that in also one part of the lessons. If we are going to talk about these multiple entries. So guys, so you can see basically you can get, I'm sure you've gotten a gist of it and what to look out for and what to do. So guys, I want you to backtest this until it works out for you. If you have any question, you can always reach out to me. If you have any comment, you can always leave your comment on the comment section below, and we're gonna reach out to you guys. Let me know if you are learning something from this. So in our next lesson, we'll be looking at now a bullish market and how to approach these things. So thank you so much guys for watching. This is EagleEyeFX signing out.